In Investing 101, Dave Bartosiak of Zacks.com is here to give us a quick lesson on the price to earnings ratio and why it matters to investing. Good to have you here.
Good to be here.
So let's just break it down. What does price to earnings mean?
Well, essentially what you do is you take the EPS estimate, or the actual EPS that the stock is making. Right?
Earnings per share.
Earnings per share, how much money are we going to make? And you take what the stock is trading at, so what price is it at, and just put one over the other, divide them, boom. You got the PE ratio.
There you go. Let's take a look at a real live active stock. It's Apple. So what's the price to earnings ratio in Apple?
So right now, Apple's PE ratio is about 12.75. So if you take their earnings per share, multiply it by 12.75, you get where they're trading at. That's sort of 108, 109 area where they're at today.
So what does that 12% tell me, though? What is that telling me about the company?
So based on how high that PE ratio is, it'll tell you kind of how investors are categorizing the company. So those that have lower PE ratios are seen as value plays, whereas those with higher PE ratios, those are growth plays. And the reason why is because if you think about it, if you're expecting a company's EPS, or earnings per share, to grow significantly over time, then you'd be willing to pay a little bit more for that stock. So that's why that ratio ends up getting a lot bigger when you see companies where we're expecting them to make a ton of money in the future versus companies that are, more boring, right? That are just going to stick around, the big dividend payers. So a lot of the banks will be in the situation where they're more of a value play. They'll have much lower PEs.
Okay, so is it better to invest in one or the other, or you just have to decide as an investor what your risk is, or how much you like the company, or what you think about the stock?
Sure, so it's an important part, but it shouldn't be the deciding factor necessarily, because there's a lot of factors that go into it. And if you think back in the day, not too long ago, Amazon's PE ratio was negative for a while, right? Because they didn't care about the actual EPS numbers. Bezos was always focused on that revenue growth number. So it really depends on the company. It depends on how the business is structured, and it also depends on your personal investing style.
So just one more piece of homework before you invest. Good to have you here. Thank you.
Good to be here.